You wanted the best. You've got the best podcast. The hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
Hi, folks. It's Voss here from the ChrisVossShow.com. There you go, ladies and gentlemen. The Iron Lady sings and that makes it official. Welcome to the big show. We certainly appreciate you guys. As always, for 16 years and over 2,000 episodes, we've been bringing the Chris Voss Show, and it just keeps getting better and better. We have some of those brightest people on the show. None of them are me, of course. I'm just the idiot with the mic. In fact, that's what we were going to call the original podcast, I think, the idiot with the mic. But then it just sounded really bad on our guests. It's like, this doesn't sound like it's going to work out well for the guests. The guests are like, what show is it called? Idiot with a mic? I'm not doing that. Anyway, guys, go to Goodreads.com Chris Voss. This stuff I make up. LinkedIn.com/Chris Voss. Chris Voss won the TikTokity, and Chris Voss laughs at his own jokes. We have an amazing young man on the show with us today. We're talking to him about his work and how he can give you some advice that can make your life better. That's what we do on the Chris Voss Show. It's all how to make your life better. You ever notice we don't have guests that tell you how to make your life worse? Maybe we should do that instead. I don't know. Nathan Turner joins us on the show with us today. He's the founder of Earnest Investing and the host of the Diversified Mortgage Expo. We're going to get into his life, his journey, how he became an entrepreneur. So you're going to learn some stuff from him. If you don't learn anything, well, or else. Don't make me come out there, kids. Nathan Turner is known across the U.S. as the Canadian Note Guy. Having run several businesses, including fix and flip real estate, he discovered mortgage notes and the opportunity they provide in the U.S. in 2009 and has since become a leader in the industry in the private investment sector. He is the president of Earnest Incorporated and manager of the U.S.-based Earnest Investing LP Note Fund, where he actively manages assets for accredited passive investors with a focus on purchasing, performing, and non-performing first lien mortgages in the U.S. He's also the owner and host of the Diversified Mortgage Expo, a leading annual note conference, and has a history of being educational, no-pitching events where those who want to learn, network, grow, come together. Welcome to the show. How are you, Nathan?
Absolute pleasure to be here. Thank you so much for having me.
It's an absolute pleasure to have you as well. Give us your .coms. Where do you want people to find you on the interwebs?
Oh, best place would be earnestinvesting.com. That would be the best one. There's a link over there to Diversified Mortgage Expo if you're looking at that one. But everything can be found on Earnest Investing.
There you go. It sounds very earnest, the investing that's going over there. See what I did there? The cheap
Absolutely.
jokes. The cheap
Yeah.
jokes. So, Nathan, give us the 30,000 overview of what you do there at the company.
So we raise capital. That's our first and foremost. Raising capital from investors. We are a 506c fund, which means we can take on accredited investors.
Oh.
So that's people that make at least $200,000 a year, $300,000 with a spouse, or they have a net worth of over $1 million outside of their primary residence. They invested in this fund, and then I go out and I buy mortgages. Instead of buying property, I just buy mortgages that are attached to property so that the property itself is the collateral. That's our backup plan if in case we need it.
There you go. And then you also have your expo that you have. Give us a blurb on that from your words.
That is a total side gig-ish, but it's a once a year conference. I took it over a couple of years ago. So this 2025 will be our 10th annual, actually.
Congratulations.
For me running it, but
and you guys survived COVID, so there you go.
Yeah.
Couple
All the way
expos,
through COVID, everything.
Couple expos, I wasn't sure we were going to survive COVID.
I know. It was touch and go, but I took it over after COVID, so that's my luck.
Now, I used to own a mortgage company for 20 years, and then 2008 came. That was one of our crown jewels until then.
Yeah.
And so when you say you're buying mortgage notes, are these the note themselves of the mortgage, or is it part of what they used to have these things called? I think they were strips or debentures, or they would be strips of the interest in the principal. Is those different from what you're doing?
That's different. We're just buying the actual note itself. And
Wow.
then I buy it, and the note is assigned over to my company.
Mm-hmm.
So the only thing that changes for the borrower, the person living in the house, is
Mm-hmm.
instead of sending the money to you, now they're sending it to me.
Cool. Can we get them to send it to me? No, I'm just kidding. No, I'm just kidding. Don't do that. Now, why? Why are you doing that over, say, doing real estate investing, or I don't know what were the strips called, where they would strip off the interest and package it on mortgages, and they would strip off the principal and
Yeah,
package it. What was
you
that?
can do all that stuff.
Yeah.
It's a lot of work.
It is a lot of work, and it helped collapse the economy because they sold it over and over 20,000 times around the world.
Yeah.
It's quite the Ponzi scheme going on there, but it's a good thing the government bailed them out because rich people can't be poor. Anyway, I know what that means. But so, how did you get into this business? Tell us about your journey. How did you grow up? What got you into being an entrepreneur and into this particular sort of niche, really, kind of?
So I'm Canadian. First of all, I think we
Well, that
established
explains everything.
Yeah.
Yeah. Eh.
But if you go back, so 2005, 06, I was doing fix and flip real estate. And I really liked that. But honestly, at that time, I bought the house, I did some light rehab on it, and I could resell it for a really handsome profit after that. And so it was
Nice.
relatively easy to do. But you need to have the right market conditions for that.
Yeah.
As the market changed 07, 08, I got stuck with one property, and I ended up being a landlord for a little while.
Uh-huh.
And the thing that I learned was I really liked the cash flow, and I didn't like anything else. I could not understand why people become landlords. That's hard work. There's a lot
crazy.
involved. It was just a pain. And overall, the return on investment is really not that great, because then you end up having to put money collected back into repairs and whatever. That's just didn't make a lot of sense to me. So fast forward a couple of years, I was introduced to this note investing thing. I went to my first conference in 2009, and what I recognized pretty quickly is I can get all the cash flow, the thing that I liked, without any of the headaches that go along with it.
Hey,
I'm
that's a
not
good
the
deal.
owner of property. Yeah, I don't own the property. The person living in the house, they do. So they take care of the house. Your bank doesn't fix your roof. The bank doesn't fix the toilet. That's the person living in the house. That's their job. I just collect the checks.
Ah. So that's brilliant, because I have a bunch of friends that they do the rentals. We've had a ton of investors in Airbnb and mobile home parks. Mobile home parks seem to be really big. In fact, we just had somebody on last week who invests in RV parks. So they're doing all that gambit. But yeah, there's all that work, the cleanup, there's nothing worse than when they call you and they go, hey, I've done this to people I've rented with over the years, where it's like, hey, the water heater went out, eh? And they're like, oh, damn, that's a lot of money. And I'm like, yeah, well, it's your problem, not mine. I kind of like that. Owning a home's getting really out of control expensive for people.
And not to say there's nothing to do. There's still work involved, don't get me wrong, but I don't have to deal with tenants, toilets, trash. None of that's my problem. I've got other problems.
So this sounds like so is this, in your opinion, and you of course market your fund to everyone, or is it only credited, or is it both?
For my fund, just accredited.
Okay.
You need to be somebody who makes some money, first of all.
You got to make some money, or you don't get no funny. That's
Yeah.
what my last 10 wives said. Anyway, I don't know what that means. But so tell us about mortgage notes and buying them, and is there an ROI difference to this, where it's just really, it pays better, or maybe from an ROI aspect of the work that you have to do, like all my friends who are landlords, they have to go out and do that, hammer stuff basically.
Yeah.
There's a lot of hammering going on.
Yeah, you start hammering nails. No. So, like I said, there's excuse me, there's definitely work involved, and I don't want to give the impression that it's just like a total brainless type of operation. It's not. There is work involved, and there's regulations. So let's back up. It's not real estate. What we're talking about is buying the financing. So this is much more of a finance game than it is a real estate game. The real estate just happens to be the collateral.
Mm-hmm.
So we're definitely interested in that collateral. We want to make sure that the value of the property is there, all those kinds of things. So there's an interest there, but we're not actually buying the house. We're just buying the financing that goes with it.
Now, if the people don't pay their bills, are you the one that repos on it?
If I have to, but the reality is most of the time I don't. And part of the beauty is I'm not a bank. I'm a regular guy. So when I talk to the borrower, if for some reason in the non-performing category where they're not making payments, if they've fallen into something happened and they're not able to make payments, I am far more flexible than a bank. The bank has their little box. I don't really have a box. We can negotiate and we can say, okay, what's going to work for you? What's going to work for me? How can we come together on a good deal for both sides?
Serious?
And almost never do we have to foreclose on a person. Most of the time, if it's a foreclosure, it's on an empty house.
Wow. So like they've abandoned the house or something. Maybe it's a. Do you
Abandoned
focus?
the house. Maybe they passed away. Something like that.
There you go. They abandoned the house. There was a lot of that going on. I remember during 2008. There was I remember being at one of the banks I was consulting with for mortgages, and was it San Diego? Santa Monica. And I was up in there upstairs in the back office, and they go, "Yeah, we just got another bag of Jingle Mail," and I was like, "What the fuck is Jingle Mail?" And they go, "Oh, you haven't heard about Jingle Mail yet?" And I go, "No, it's Jingle Mail." And they go, "There's so many owners that are abandoning their second homes and their primary homes. They just throw their keys in the mail with some nasty, FU probably to the bank."
Yeah.
And there's so many keys that get mailed in, the postman can jingle the bag and it's Jingle Mail. I'm like, this is not right. This is scary.
That was a big thing back in the day.
Jingle Mail.
Not so much now, but yeah, there was a big
maybe
almost.
Maybe is there a way that I mean, people go through ups and downs, but sometimes there's people that are just shit renters. But maybe shit renters are different than shit owners. I'm
typically
shaming owners at this point.
Most of the time, I mean, there's some ownership pride there going on where they're taking care of their house, they're painting the fence, whatever. Sometimes they don't. There's certainly those out there where they don't really take care of the house. So that happens. But part of our research before we buy that note is actually I'll send somebody out. So I live in Canada. They're out there. So I'm sending somebody local, a local realtor typically. They go out and look at the house. They're telling me, as is value. So I'm not necessarily concerned about what it could be worth at some point at a future date if we did some work on it. I want to know today's value. So that if it defaults and if nobody pays on that, I want to know that I've got protection built in.
You're making sure they don't have tires and washing machines on the lawn or something
like
that. I suppose. Unless you're buying in Kentucky, then that's standard procedure. Yes, that actually adds value to the home by 25% if you have tires in a thing. Why am I being mean to Kentucky today? What did Kentucky do wrong? So now, are you when you buy these for the fund, are you able to negotiate a discount or premium, or how does it work?
Yeah, I'm pretty much always buying at a discount. I typically buy notes at there's a difference between yield and ROI, and we may or may not get into that, but I'm typically buying at about a 12% yield, and then I pay my investors 8% ROI.
Oh wow! So keeping 4% for the fund?
Yeah, it doesn't turn out to be quite that high, but that would be nice. But
there's fees and there's the fees of the fund and management and
lawyers, all that fun stuff.
Oh, lawyers, that's 5% right there.
Yeah.
Even though there's only 4. See how that math works, kids? That's what we call American math, not Canadian math.
Stay in school.
Yeah, stay in school. Go to Canadian school, eh?
Yeah.
It's all about that. Let's. Is there anything more you want to touch on in Earnest Investing? I was going to have you tell us more about the Expo. I want to make sure we cover both for you.
No, I think that's pretty good there. Like I say, bringing on investors if people are interested in the business and just want to know
Mm-hmm.
more about it. So here's the thing. There's plenty of people out there that will teach the business. I'm
Mm-hmm.
not one of them. If it sounds interesting and it sounds like a cool investment to you, awesome. Let's
Mm-hmm.
have another conversation. If you want to learn the business, I can refer you to some friends.
Is there a max holdings that you can have in the fund before you got to start a new one, or what's your vision for what you guys are trying to achieve there?
Yeah, the current fund is just set up for 5 million, which is actually a relatively small number. I know that's a lot of money, but it's
Yeah,
actually a
that's like
relatively small number.
one home in today's market, I think.
Yeah, yeah. I typically buy loans on properties with values under 250,000,
Okay.
so that we can spread that out and have a little bit more diversity inside the fund.
Yeah, that's got to be hard to find these days. Well, I imagine there's pockets of America.
Kind of eastern half of the country, it tends to be like Texas to Michigan, everything in
That's
between there.
true. Everything in the South has been going really well because the
Yeah,
rates are cheap. I know. Yeah, Texas. I was looking at some houses in Texas, and my mom's 30-year-old home next door neighbor sold for $500,000,
wow,
and they're old homes.
yeah,
And I was looking at like for the same price, $500,000 in Texas, it's like these mansions. And I was like,
yeah,
it's like I'm
yeah,
going to Texas, I guess. Although,
yeah,
watch out for that real estate tax in Texas.
yes.
Uh, that's out of control. But you don't pay normal taxes, or no, not normal taxes, personal taxes for state or something. That's the benefit. Plus, you don't get electricity when the snowstorm goes out, so that's an
That's
added bonus in
that's a bonus. You're
Texas.
not paying for it if you're not
Yeah,
using it.
I mean,
Yeah,
why get on the United States grid?
yeah.
So, how do people onboard with you? How do they find out more about what you guys do there? Get involved? Talk to you directly.
Yeah, it's going to be a one-to-one conversation. So there's on my website, there's a place there where you can book an appointment with me. I want to make sure it's a good fit, make sure that I can help you achieve whatever goals you've got. I'll say that it's a fantastic IRA investment. If people have
Hmm.
money in their IRA that's
Ah, so they
doing
can
worse
divert
than
that.
8%, yes, absolutely. We'd love to
There
have
you
them
go.
on board for that.
So you can utilize your IRA and put it towards this.
Yeah,
It sounds really interesting because we're starting to see, I think, some changes in the housing market finally, and I think part of it, it's the interest rates and the inflation stuff, but some of it's like with Florida, evidently
yeah,
Florida, and I think Texas are starting to have some issues. I know Florida's they've had these skyrocketing condo fees because of what was that collapse a year or two ago of a
yeah.
old condo, and so now all the condos are having to upgrade and fix themselves because I guess they were just phoning it in. And there's some legislative things the Republican Congress did there that I guess upset the insurers or something, and so they've left largely
Insurance
in
has got, yeah,
yeah insurance and yeah insurance
yeah,
and so it's just it's too costly with the damage. So evidently
yeah.
a lot of the condos are exploding and coming online. Texas a little bit. What do you see as the future of real estate and where real estate's going?
Well, real estate itself, I think we're looking at another downturn.
Mm.
I don't think it's going to be 2008 type magnitude,
Yeah,
but I do think
probably not.
we're looking at a downturn. But
Yeah.
I'll plug notes again, just as an asset class. One of the cool things about notes, I mean, there's a lot, but one of the
Mm-hmm.
things I love about it is um, whatever's happening in the economy doesn't
Mm-hmm.
really affect my note because
Hmm.
I've bought an established set of terms. So whatever the borrower has agreed to, that still holds true whether the economy's up, down, interest rates down, up, whatever
Huh.
doesn't matter. They are locked into whatever terms they signed in the beginning.
Hmm.
So that's one of those things I like. I wouldn't say recession proof because obviously there gets a
Yeah.
breaking point where they're not making payments, but it certainly helps.
Well, worst case scenario, if rates go down, they just refinance and then you're paid off and you make
Right.
your whatever your portion is, but then that frees up money to go into other things so you can ride down the market if rates go
Yeah.
down.
Yeah.
You just keep resetting, or if the people may have to stay at higher interest rates. But I think it's really interesting how you don't have to do foreclosures. Maybe banks are really missing something here. Maybe maybe this isn't a niche. Maybe this is a new way you're hacking of disrupting the system because there's a lot of waste. I think.
Yeah.
I don't know if
Yeah.
anybody's ever measured it, but there's got to be a lot of waste in foreclosure. There just has to be.
Absolutely. Waste all over the place. And I, without slamming the banks too much, honestly, I'm better at it. And part of it is because I can be so much more flexible. The bank is going to have whatever, parameters they have set up, and somebody decided in the board meeting that that's how it should be.
Yeah.
Me and the borrower, I can take your book and we can negotiate until the cows come home and just decide what works. And we can work out something that's far more beneficial for both sides.
Yeah.
Because we have that flexibility.
I think one of the problems from what I remember in the mortgage business was one of the legal problems that holders have of notes is that if you accept any payment that's less than the set payment and you do that for one or two times, that it technically reestablishes a new contract. Is that true, or
not to my knowledge, but that would be an interesting play.
I think that's what banks were telling me back in the day, because I think I asked people, like, why don't you do what you do now?
Yeah.
I didn't know I'd ever meet you, but I guess I did. But I'm like, why don't you do that? Why don't you just work it out with them? And they're like, well, if we accept payments, at least, especially with a pattern where they're like, well, we'll take $500 from you for the next 5 months.
Okay.
It becomes a reestablishment of a new contract that supersedes the prior contract.
Yeah. I can see that argument, yeah.
And I imagine that might be like, lawyer paranoia, sort of speak, but I think that's what a bank told me once. I think it was Crossroads Bank, but I think that's what they told me once, and that was kind of the operational standard of the mortgage business back in 2008. But we see how that turned out.
But if that's the case, I would look at that and go, okay, so you've been making this payment the last 4 months. It looks like that's what you can afford. So let's make it official. And that might mean that we then stretch out the payments again. So if you're down to 20, let's put it back up to 30 so that payment makes sense.
So do you change interest rates on them, or just?
Sometimes I've done interest rates up or down. We've done both directions. We've had payments go up or down.
You can lower them?
Oh yeah, we can do
I'm
whatever.
I'm gonna buy a home and have you take over the note on it, just in case I ever, hit the skids. That 2008 was kind of hard, but I got over it.
Yeah.
But I don't want that to happen again. But then again, I don't own a mortgage. We own a lot of companies, and everything just came to a standstill. You couldn't make anything work. I mean, I was working the corner, and no one would hire me. So, and I look good in a mini dress. No, I don't. Stop, people. Don't look for that OnlyFans. It's non-existent. So anything more you want to plug that we haven't taken and discussed here, Nathan?
I think that's good for the fun. I think we covered that. But yeah, it's an awesome asset class. Love to have people on board.
There you go. I'm now getting floods of comments. Where's the OnlyFans of Chris in a mini skirt? So you can use this to build your retirement account. You can use your IRA, old 401k. Is there a minimum investment amount?
For me, it's 50,000.
Okay.
You can find other places that may be more or less than that, but my fund is 50.
Do you take a check? No, I'm just kidding. That's a joke. That's a good callback joke.
I think a wire transfer.
I like this. I like this because I know so many people that are landlords, and whether it's Airbnb or normal or a Section 8, I mean, I see some of the stuff they have to do. Like, they always talk about how great it is, and it does seem pretty great on paper, but they're like, oh man, I got to go out to the house, and look at this mess the renter left when we evicted them, and I'm up on the roof now with a hammer, and I'm just like, oh man, that is not me, man. I do not do that. I don't want to, I think what was it? My mother-in-law, when she married my father, she had a house from her prior, and the people quit paying because it was in a completely different state, and I think they could get away with it. They thought they could get away with it, and when they evicted him, they poured cement down all the pipes. Yeah, that was
good. I've never actually had that. That's always kind of been on my radar, but it's never happened yet.
Well, I think in your case, it's much better than that renter investment because an owner has kind of a different mindset. It's still their property in their mind, right?
Right. Usually. Yes.
And usually, and so their attitude towards their property is they still kind of own it, they
Yeah.
care for it. You know, when you're a renter, you're just kind of like it's kind of like when I rent rental cars. I'm just like,
Yeah.
let's go four wheeling with this thing. Who cares? Like, whoever
Right.
buys used rental cars, you're insane. Let's
Yeah.
just put it that way. There's things I've done in rental cars that probably should be illegal. I'm not sure what that means. Anyway, I don't.
But yeah, that's exactly it. We keep an open communication. Even if we are looking at a foreclosure, that's after we've exhausted all other possibilities, and we can both tell that that's going to be the best course of action. And even in that case, we'll do something where we'll pay them to leave rather than have to go through the whole foreclosure process.
Maybe they should legislate this. I mean, we need to protect home ownership better, and maybe they should
For sure.
legislate that banks need to, But then that would take out your niche market. But
That's
I
the
like
thing.
this.
So maybe not.
I like this way better than investing in real estate directly.
Yeah,
It just seems more safer, and
I think so.
you got
Yeah.
a better person in the home. I'm shaming
Right.
renters now. Good job, Chris. Way to go. Renters are good people, but there's honestly, you care more about the home if you think you own it or have a
Right.
portion of it. I certainly meet a lot of people like, I'm a homeowner. I'm like, you bought it last month, and
Yeah.
probably 1 penny goes towards the principal. Stop it.
Yeah.
You don't own it yet. So there you go.
Not yet.
Well, give people your final pitch out, Nathan, to onboard with you guys, how to reach out to you, get in touch, maybe how they can learn more. I see you have some media also on your website, speaking engagements, and different
Yeah.
things people can see what you're up to. Give us that final pitch out as we go out.
Yeah, absolutely. So that website again, earnestinvesting.com. That's EAR, not Ernst, but we are Earnest, earnestly investing. So
Earnestly.
earnestinvesting.com, and then have a look, see what you think of the website. It's not the fanciest, most glorious, but it'll give you some information.
It's a
And
good-looking website.
there's a booking link there. So
It's better than mine. It's a damn good-looking website. Jeez. You're really
I'll
hard
come and
on
chat.
you.
I'd love to have more of a conversation.
There you go. Then Nathan, thank you very much for coming to the show. We really appreciate it.
Hey, pleasure. Thank you.
There you go. And thanks, Earnest, for tuning in. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss. Chris Voss, one of the TikTokity, and all those crazy places on the internet. Thanks for tuning in. Be good to each other. Stay safe. We'll see you next time.